Hey guys, welcome back to another video. In this video, we're going to be talking about Valero, and we can see that this stock is up 30% year to date, while the rest of the market is only up about 6%. And for context, obviously this is an energy company competing in the oil industry, and other oil companies like Occidental Petroleum are up 10% and ExxonMobil is up 17%. So Valero is outperforming two of its biggest competitors in the oil industry. And so in this video, I'm going to talk about Valero's business model and how they make money. I'm going to look into detail in their financial statements to get a better understanding of the financial health of their company, as well as the impressive earnings results they had in 2023 and in the fourth quarter of the year. And then lastly, I'm going to use a discounted cash flow model and a relative valuation model in order to figure out the intrinsic value per share for Valero so we can know if this stock is a good buy at the current share price. So basically, Valero's primary source of profit comes from refining oil into various petroleum products used in the energy market like car gasoline, diesel fuel, and jet fuel. They operate their refineries in countries all over the world like the US, Canada, and the United Kingdom, with their main focus on maximizing efficiency and minimizing costs. Valero sells its products to the market through its network of retail gas stations across the US, with its oil profit margins fluctuating variably as a result of fluctuating gas prices, geopolitical tensions like the ones in Europe right now, and also just pure economic inflation. So now we can look at their income statement and we can see that for the full year of 2023, they had revenue of $144 billion, which is down 18% year over year from $176 billion. And then we can also see that they had net income of about $8.8 billion, which was down 23% year over year from $11.5 billion. But keep in mind, 2022 was a pretty big year for oil companies because of the rising geopolitical tensions that occurred during that period, as well as the price of oil. So we can see that a lot of oil companies experienced a spike in revenue and profits. However, 2023 was a much calmer economy, especially within the oil industry. It was a lot more similar to 2021. So if you want to compare this company's revenue and profit growth across two periods of the economy that were relatively similar, you can compare 2021 and 2023 as opposed to 2023 and 2022. And so we can see compared to 2021, Valero's revenues are up and their profits are also substantially up as well, from about $1 billion to about $8.8 billion. So based on that growth, it seems to me that not only Valero, but plenty of other oil companies like ExxonMobil and Occidental Petroleum are able to produce stronger earnings even in an environment that is very similar to the economy in 2021. Lastly, for financial statements, I wanted to look at page 78, and we can see that for page 78, they basically show their cash flow statement, and they show that they paid out common stock dividends of about $1.4 billion and also purchased common stock of about $5.1 billion. In total, they returned about $6.6 billion through share buybacks and dividends, as was reported in their annual report. And they also increased their quarterly cash dividend by 5% from about $1 to $1.07. Also, just to touch on something real quick from the income statement page, although it doesn't say it here, for the fourth quarter, they had $35 billion of revenue and they had about $1.2 billion of net income, with the rest of the revenue and earnings coming from the first three quarters. So now we can see this discounted cash flow model to try to figure out the intrinsic value per share for Valero. I'm using a growth rate of 19%, which I got from this historic growth rate calculator here. Basically, I took the free cash flow they had in 2019 of about $3 billion and the free cash flow they had in 2023 of about $8 billion, and divided that by, or used their growth rate over the number of years, which was 5 years, and that showed a historical growth rate of about 19% compounded annually. To calculate the weighted average cost of Valero's capital, which I'm going to use as the discount rate for this DCF model, I use this calculator right here. You can pause the video and get a better look at it if you would like to. And then also, based on their balance sheet, they currently have a net debt position of about $7 billion with 300 million shares outstanding, putting their estimated intrinsic value per share based on their projected free cash flows at about $670 per share, which does put them at a very steep undervaluation at the current share price. But to me, this wasn't a very reliable source of valuing this company, because obviously Valero might not be able to continue to grow their free cash flows at a 19% rate for the next 5 years and then about 10% for the next 5 years after that. So instead, I decided to compare the results of this DCF model with this relative valuation model here. Basically, I'm taking the PE ratio, the price to sales ratio, and the price to book value ratio of Valero Energy and comparing it to the ratios that I've concluded are pretty normal for the industry by taking the average of 3 of their competitors, Occidental Petroleum, ExxonMobil, and ConocoPhillips. And we can see based on this, it looks like Valero Energy has a slightly lower PE, PS, and PB ratio compared to the industry average here based on these 3 companies. They also have better historical earnings growth compared to the industry's 16%. They have about 30%, but they have slower free cash flow growth, sitting at around 19%, whereas the industry's here for these 3 companies at least was about 34%. So based on these metrics and comparisons, I calculated the intrinsic value per share for Valero based on PE, PS, and PB. And we can see that for PE, it comes out to about $370 per share. For price to sales ratio, it comes out to about $207 per share. And then for PB ratio, it comes out to about $81 per share, which means that Valero is currently trading below intrinsic value per share for 2 of these metrics, which is PE and for PS. But for PB, it would be slightly overvalued based on that metric, based on its current share price, as we can see at 169. So compared to the DCF model, these are obviously much smaller values, but either way, if you're looking at the DCF model or the relative valuation model, it looks like Valero might be trading at a good buying price at the moment. But lastly, just to touch on, Valero it obviously isn't really a growth stock. It's a dividend paying stock. As we'll see later in this video, they actually have a very strong dividend yield. So if investors are planning on buying shares of Valero, they wouldn't really buy it for the growth. It's not a tech stock like Nvidia. They would mainly buy it for the share dividend. Now we can see this industry analysis comparing Valero to Occidental Petroleum and ExxonMobil based on profit margins and dividend yield. We can see that based on profit margins, Valero has some of the lowest profit margins out of these 3 companies, with Oxy at the top. They only have a 9% gross profit and 6% net profit compared to Oxy's 34% gross profit and 16% net profit. But they also have the highest return on equity and about a middle of the pack debt to equity ratio. So that could be obviously a very good sign for anyone who's invested in Valero, because you're getting a better return on your equity than maybe if you invested in Occidental Petroleum or ExxonMobil. And that was also indicative of the fact that we saw from their stock price that their stock has grown a lot more year to date than Occidental Petroleum and ExxonMobil. Also, we can see that for dividend yield, they pay a 3.14% dividend yield, which is second on the list, ahead of Occidental Petroleum, but behind ExxonMobil's 3.68%. But even still, 3.14% is very high, and considering the fact that Valero has had a better stock price growth than ExxonMobil year to date, you could make the case that Valero Energy has returned better return on investment for their investors compared to ExxonMobil. Lastly, I wanted to compare Valero to some of the other companies we've looked at on this YouTube channel. Based on this DCF model, Valero comes in 3rd place in terms of comparing their share price to their estimated intrinsic value per share. 2 of their main competitors, Oxy and ExxonMobil, come in the 1st place and 2nd place spot here. We can see Valero was trading at about 25% of their estimated intrinsic value, with Oxy at 11% and ExxonMobil at 12%. And then you can see the rest of the companies on this list, with ConocoPhillips and Chevron also making it onto this list. Then we can see based on growth rate, Valero had a historical free cash flow growth rate of 19%, which put them in 9th place on the table here. Exxon and Occidental Petroleum are higher with 44 and 43%. Based on dividend yield, Valero comes in 5th place with a very impressive 3.14% dividend yield, which is 5th highest out of every company we've looked at on this channel so far. Then for gross profit and net profit, we saw they had pretty abysmal profit margins sitting at around 9% gross profit and 6% net profit. So obviously not good enough to get them onto these tables. You can see the companies here that did have the best profit margins, as we can see right here. Also, I usually rank companies based on their year-over-year revenue and earnings growth for the quarter. But for Q4, we saw that Valero actually experienced a decline in their revenue and earnings year over year, so they weren't good enough to get onto these tables either. But you can see the companies here that had really good revenue and earnings growth for Q2, Q3, and Q4 of 2023. So far for Q1 of 2024, Broadcom is the only company we've looked at. Lastly, for stock performance over the last 5 years, we can see that Valero Energy is up about 91%, which is very good, especially considering the fact that you take into account they also pay out a pretty good dividend yield as well. But just based on this stock price, they're not good enough to make it onto this table. Obviously, Nvidia has the highest at 2,000%. So let me know in the comment section down below what you guys think of Valero. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.